5 green days in a row and the market is on fire. Let's talk about what's happening this week. Welcome to our elite webinar, and I have to tell you, the market looks like it is going to the moon. We have absolutely gone nuts this week. And before we get to anything, make sure you hit that like and subscribe button down below. Click the bell icon to get notified every time we upload a new video here on the channel, because you're going to want to see what we've got next. I've got Riz with me tonight, and we're going to talk about this. The market has done a complete 180. Riz, what is going on?
Yeah, what is going on? I mean, it's a massive, massive rally. I mean, I'll get into my positioning later, but wow, it almost seems like it's GameStop or something short squeezing. Look at that massive vertical move up, like literally a 5% gain on the week, a little bit over a 5% gain in the market per week. That's huge. Like, that's massive. Like, that kind of reminds me of 2020 April, May post COVID crash. Like, look at that, 5.4% in a week on an index. Like, this isn't a a stock. This is the entire market index, the S&P 500, a massive, massive move. Like, I cannot tell you how unprecedented it is to have this kind of massive move. But that tells you something, right? That tells you, whoa, something happened in the market this week that I think begs to be paid attention to, one way or another, regardless of what your thesis is or if you're leaning bullish, bearish. It's a sizable move. Definitely looks kind of like how a lot of buying pressure, obviously, but perhaps even quite a bit of the bearish bets, whether it's from CTAs, whether it's from institutions, hedge funds, whatever you have it, maybe even covering shorts, maybe, okay? Because this kind of buying is not necessarily, I mean, I wouldn't say it's not obviously common, but it's also not singularly simply because just of buying. There's other things along with it.
Well, yeah, I mean, obviously we had the Fed speech about interest rates. They obviously didn't raise interest rates again. There was a hold. So, I mean, that was obviously a positive catalyst. But I would say let's be careful, because we've been here before. Of course, it did take us 2 weeks to get back down to 4,100, but, and in 1 week to just erase all of those losses. So obviously there's a lot of buying pressure going on here, and a lot of positivity, a lot of positive emotions. The risk seems to be coming off, but you'll note here, before we kind of stalled out last time right around this area, right around this 43.80 area, which we're getting very close to. So, I mean, there's definitely some overhead resistance that we still need to overcome if we're going to see this rally continue. But obviously we had some big earnings this week. Riz, why don't you tell us about what happened with those?
Yeah, we had Apple, right? We had Apple.
Yep.
What else did we have? We had, I believe we had something else. I can't remember. But yeah, Apple was the big one, right? Absolutely critical. Of course, they beat earnings and revs, but they had a declining, like, I think this is like the third or fourth quarter declining revenues, so sales. So remember, you can have projections, guidance, whether it's from analysts or whether it's from the company itself. And when they decrease those for the coming quarter or coming few quarters, that means that they can still beat them. They've just decreased them. They essentially, think of it like putting the bar lower and then coming ahead above that bar when you do release, right? And Jazz says in the text here as well that AMD is another one. Yes, I should have known better. But yeah, Apple was the biggest, obviously largest company. They literally went negative 3% after hours after the release, and then they somehow ended up just recovering the little bit of a drop from open and ended up green. And we can see that with another bullish candle there, not quite as past the Thursday's price, but nonetheless a solid recovery either way on Friday. And yeah, very interesting price action. And you can see we're also right there at the 50-day moving average. You can see the two moving averages, the 50 and the 200, in the yellowish and the reddish lines respectively coming together, converging, right? Apple has been on a massive, massive run. You can see that from the start of 2023, holding above those moving averages, right? So that's leading the moving averages up. But anyways, this isn't a technical analysis session. Those two were the big ones for me. We do have another, I would say the last week of earnings season, so to speak. These companies that are releasing are, I don't want to say they're not important, because we do have things like Disney. We'll get into that stuff, but they're definitely the big ones are done, right? Like we've got the Amazons, Google's, Microsoft, Facebook, like Meta, Apple's, those are done. So we're in that final week of big time prime time earnings season. But of course with more smaller growth stocks. Not all, but mostly. Okay, so we'll be touching on some that I'm going to be keeping an eye on for this week. But yeah, a very, very, very interesting trading week so far.
Yeah, we haven't seen a bullish week like this in quite some time. Let's take a look at the breakdown for the S&P 500 and really see who the big winners were this week. Now, of course, with the market going just absolutely nuts, we're going to see a rise pretty much in all sectors for the most part. But of course, tech and communications got the biggest boost with those Apple and AMD earnings. So, very nice spike here. Consumer discretionary also saw a big push up this week, coming from about 15% all the way up to almost 25%. So almost a 10% move in, just a little over a week for consumer discretionaries. But I mean, look how parabolic these curves are going, and it just matches the S&P 500 there. And we've talked about this before, where we see these market sectors really kind of propping the market up. So when they do well, the market does well too. But that being said, we take a look here. Financials saw a very nice run up almost to the zero line, but still underperforming. Energy is, saw a little bit of a perk up, but really not much, not compared to what we saw here with these big three sectors right now moving probably the most, and everything else really just kind of benefiting with it.
Yeah, you're right. You nailed it. The only outlier here is energy, like you mentioned. I would say definitely the underperformer this week. Absolutely. Yeah, it's above the zero line, but from a performance standpoint for the week, definitely an underperformer. You could see pretty much everything went up, even utilities moving up, right? So it tells you, wow, it was a lot of buying going on, without a doubt. And I would say energy was kind of the more depressed asset class, or I would sector, I should say, for the past week.
Well, let's talk about that because I think that's really interesting given everything that's happening on the geopolitical arena or stage, whatever you want to call it right now, because oil is really kind of suffering right now. I mean, with everything going on in the Middle East, everybody's talking about it, right? There was announcements this week, that happened. People were talking about we're going to do this and we're going to do that. We're not going to get into the weeds as far as that's concerned, but you would think with all of this, fuss in the Middle East right now that we would see oil prices spiking, but we really aren't. Is this really just, demand destruction, Riz, or is it seasonality? What's holding oil down at this point?
Yeah, mostly seasonality. I think the market had a view of the impacts on oil a little bit too much, so it kind of just spiked a little bit too. It maybe got a little bit ahead of itself.
Mm.
And then we see the economy also kind of teetering. I don't want to say sorry teetering, but like we saw unemployment tick up a little bit. Past week we saw um, jobs or like employment numbers weaken a little bit in terms of I think it was I think it was payrolls or unemployment, something like that. Uh, it was a little bit below expectations. So that economic weakness actually turned out to be a positive thing. Hence, we saw the market actually go up. Classic example of bad news being good news type of scenario. Because if the economy is weakening, the Fed's, doing what it's supposed to be and it's working what they're doing, which is, keeping interest rates at these levels because they want to cool out the economy. So it's working. That means inflation is coming down, yada, yada. Right. So that's why bad news is good news from a market standpoint. But yeah, the fact that oil continues to languish and move lower even is, I wouldn't say it's surprising, but a bit puzzling, especially with the, like you said, with the uncertainty and the strife and the conflict in the Middle East, which we know usually is a bullish indicator for commodities, especially oil.
Yeah, definitely. Those jet planes don't run off of solar panels, and until they do, I think that Greta is going to be disappointed. But yeah, definitely. Oil closing here looks like around $80.51 per barrel for light crude. So below our resistance here, around 85 that we've seen in the past. So yeah, very puzzling given all of the rhetoric and the strife going on in that region. But gold has really spiked here. But we saw this going into last week. We kind of saw this parabolic move in gold. It looks like we got kind of close to 2000. Maybe we cracked 2000 and we came right back down below it, closing the week at $1,992.08 per ounce on gold. So gold just kind of, taking a bit of a breather here. I'm not surprised after this huge move. And of course, we see everybody seeming to jump back in the market and go risk off with this huge, bullish week. It kind of makes sense to me that people would not be going into gold at that point because they're looking to get into, other securities, mainly, stocks.
Yep, you're right. You're absolutely right. I think the fact that gold is still holding up is also quite a bit of a puzzling thing after this massive parabolic move. But hey, we know that a lot of it is institutions. It's not the average individual buying gold ETFs that's moving this. This is actually it's US gold spot price per ounce. So the fact that it's moving up is definitely driven by commodities traders and institutions. So that tells you they probably position themselves and maybe it's going to hold this level. I don't perhaps see like another continuation of a parabolic move unless something snaps in terms of the economy, in terms of the geopolitical situation. I don't personally see that. But hey, here we are after a big parabolic move from the 1820 area to 1992. So yeah, again, I'm not too concerned either direction that gold goes in. Again, no position for me either.
Yeah, absolutely. Gold is, definitely a tricky beast to trade, to say the least. Let's take a look here at the bond yields and the U.S. dollar. Now, as the market ran up, bond yields seem to be taking a bit of a hit here. We still see the 2-year maintaining its dominance at this point, but not by much, honestly. It looks like we closed the week for the 2-year bond yields right around 4.8%. The 30 years looking pretty solid, getting much closer now at about 4.77%. And the 10 years are lagging, to say the least, right around 4.57% on those yields there. Riz, with this, this kind of dip here in the bond yields, is that just reflected because people are putting more money into securities and less into bonds, or, what's kind of going on there in the bond market?
Yeah, bonds actually got bid up, so people actually bought bonds this time around. On Wednesday, including with the Wednesday we had afternoon, we had Powell speak and do the Fed decision as well, which obviously they kept rates the same. But in the morning of that Wednesday, we also had the U.S. What's it called? The blanking on the word, but essentially where they do an auction for the bonds to raise more capital, more money, more debt. Right? We know the
Gotcha.
U.S. is just on a debt binge. This administration has been on a bender, so to speak. But anyways, I won't get into that. The whole point is, they do these auctions, and regardless of the demand for that, the whole point is that bond prices went up, and because bond prices went up, yields went down. Right, so this was actually quite a bit of a sizable pullback in yields, because bond market there's a potential, I would say, thesis there that perhaps bond prices have bottomed. They've hit the low, because this was literally because most people on social media, and we included and online, don't like follow or trade bonds. It's not like a thing. Like you hear everyone talk about options and this stock and that stock, but you won't hear about bonds. But the bond market's been slaughtered the past couple years, right? It's been a massive bear market for bonds, and some would say it's actually like been a bond crisis the last couple of years. So it's not something you'll hear often, but it's actually the case because bond markets aren't sexy. No one really wants to talk about bonds, even though it is the largest market by assets. There's sorry, market cap, because obviously there's more debt. Bonds represent debt, whether it's government, corporate debt, municipal debt, so on and so forth. But anyways, again, this is not a bond course, but ultimately, the fact that yields dropped. Remember, bond yields, and market. By the market, I mean the stock market has an inverse correlation. So it's not always, but the past few months they didn't have that inverse correlation where both bond yields went up and the market went up. But now you could see with this volatility we've had in bonds in the last month, October, and leading into November, we are seeing that inverse correlation once again, where we saw bond yields drop and markets rally. Okay, and moving into the U.S. dollar as well, Chris, you can see the index, U.S. dollar index also dropped quite a bit. That's a sizable drop,
Yeah.
right? For just a few days. So both giving us a little bit of a tell, so to speak, of the risk appetite. We're seeing U.S. dollar pull back a bit and bond yields come down. Is that mean that the investor or the market as a whole telling us that perhaps, okay, maybe there's a shift in sentiment around investor risk appetite around the economy. We've seen this happen before. Like, take a look at March in 2023. You can see U.S. dollar moving down, 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 along with bond yields getting slammed as well, right? Especially that what is that? The 10-year?
Yes, 2 year.
2 year. Okay, so yeah, massive drop there, right? It did eventually come back up, but you could see how we see those shifts, and if you look back, I think if we flip back to the S&P 500, Chris, what was the price action like in March? Yeah, it just started rallying, right? Look at that, right? Moves up, and then it just consolidates and then makes the next leg higher, right? Throughout the year, leading into July highs. July highs is that was the peak of where we hit this year's S&P 500 index, still below the all-time highs, but still 4,600 back in July. Wow. Okay, so very interesting. You can see that direct correlation, like I mentioned, inverse correlation with bond yields coming down, U.S. dollar coming down, markets going up. Okay, let's see if that plays out again. I will share my kind of situation, my personal, let's say, views in a bit. But yeah, it's definitely interesting to see.
It really has been obviously quite the year, to say the least. There's been a lot going on, and not just in the financial markets, but around the world as well. But with that, let's see. We've got some dates in the market this week. It looks like Powell's talking a lot. This week looks like he's talking on Wednesday and Thursday, and nothing on Friday. So yeah, obviously with Powell talking, that typically moves the market. Riz, is there anything in these speeches we need to look out for?
Nothing specific. Obviously, he's gonna provide some color as usual around what the Fed is thinking, their decisions, yada yada. So he is speaking twice. I don't know the exact details of the mandate on where he's speaking, what he's speaking about specifically, but we do know that anytime he does speak, the market obviously, does listen. Whether it's anything substantive or anything worthwhile remains to be seen, but relatively muted week so far, all things considered from a major catalyst standpoint.
Yeah, we had a lot more catalysts last week with the Fed rate decision and all of the major earnings going on, obviously. So yeah, definitely a more muted week. Of course, for all of our elite members who are here, please start posting your questions. I see we already got one in. We'll get to that in a second. I don't have the earnings whisper in front of me, but Riz, you'd mentioned there were a couple that we should be keeping an eye on. Disney was one of them, if I recall.
Yes, correct. Yeah, so we got Disney. Yeah, Disney's a big one. Look at that, already moving nice bullishly before even coming into the earnings week. Obviously, it helps that the market was running as well. That will be interesting to see. We have Uber, which again, a lot of these are growth companies. Uber on Tuesday before market open. This stock has also held up relatively well. Again, a big bullish move. A lot of these growth companies got bid up this week, which tells me, wow, risk appetite's back. It's pretty significant. Honestly, you saw a lot of the small, I don't want to say small caps, but like mid caps, growth stocks just booming, right? We that definitely indicated a little bit more of a risk appetite. But hey, let's see if that's sustainable or not. We have Oxy, right? We have Oxy this week as well. Occidental Petroleum. Warren Buffett holds approximately 25% stake in this. He has gone in and out throughout the years, increasing, decreasing his position. But right now it stands at about 25% from the last filings, from what I recall. And you can see it's kind of consolidated in this kind of channel between 68 and 56 over the past year, right? So interesting to see. I personally like other companies better, but Oxy is volatile. It moves quite a bit. So there's more speculative, volatility driven trader might like it. It's also quote unquote cheaper from a dollar standpoint, right? So people gravitate more towards that. Whereas like the stuff that I like, for example, Exxon, XOM, for example, definitely a little bit higher priced, not still volatile, but still not as volatile. You can see I like the structure a little bit better from a technical standpoint. Even fundamentally, obviously, this is a bigger company. I think a lot more solid. But hey, Occidental or an Oxy just definitely does present an opportunity for someone who wants to perhaps try and ride the coattails of Warren Buffett, see kind of if there's something there, any alpha to be made, and maybe take advantage of the technical opportunities that present itself as well. But right now, I don't really see it, but definitely a popular one. What else? We have, a few of the meme stocks as well, but I'm not gonna bother with that. But yeah, I think that's about it for me. Honestly, I don't really have too much of an interest uh for some of the stuff that's coming out, but it is definitely growth oriented.
Yeah, definitely more of the growth stocks, less of your big name tech stocks or staples going on. G says, should we take some energy positions this week? Obviously, we kind of talked about energy not seeing a big push earlier. Get this menu out of the way. There it goes. And then, of course, oil really is kind of languishing, like you said. So, would it be a good time to look at a potential energy position?
Yeah, we had some in elite, right? Full disclosure, the past couple of weeks we did wind out some of them for profit. So, some quick trades. I'm happy with those. Uh, right now, nothing crazy. I'm not seeing anything jump out at me from an oil position, long or short. I don't think I'd short any of these companies, but I don't think I feel comfortable going long in any of them just yet. And Chris has brought up the sector here as well, so that's great. Bounced off that 200-day moving average, right, from a technical. So, no, nothing specific that I'm thinking about buying from an energy standpoint. Of course, we do have the dip buy list. There's definitely some opportunities there, not in the energy sector, but definitely in other sectors there, if you really want to. And obviously, those that bought when I released the dip buy list, oh my God, the
Hot timing.
I did it
Hot
again.
timing.
Like Chris, it's a joke, right? Like I mean, it's just
Kind of is.
it's crazy every time. Again, I'm not gonna gas myself up, but every time I release the dip buy list, Chris, you know this.
Oh yeah.
It's been this is what the third year of continuing the iterations of the dip buy list. This
Yep.
tradition that started back in 2020 after COVID. And again, in this iteration that I released a week ago, wow, we have a 5% bullish move in the market.
Can't beat that.
Fuck, like, geez, like sometimes I don't know. It's wild, it's wacky. All right, I'm not chalking it up to me being able to tell the future, wink, wink. But it's uncanny, right? Like you've seen it.
Risen is crystal ball. We all know he's got it in the back of his house.
Yeah, I mean, I try and keep it shined up, but I do my best. But
Fair.
nonetheless, pretty uncanny, and I don't know where we go. I feel like this 5% moves kind of got me a little bit uh confused. I wouldn't say confused, but I'd say giving me room for thought. This is definitely too much. Like this is definitely way more of a run up, way more fast and the furious run up than I expected or anyone expected. So it's kind of like whoa, rip your face off type of rally. I don't think there's any reason for that to justify that. But Michael,
Michael
uh,
wants, yeah, he wants to know what type of flex capacitor you're using for your time travel. It'd be good to know the model number on that.
yeah,
I don't think Riz has got a DeLorean, but he has some other things he could use.
yeah, I don't have any of that tech, Michael. You know, I'm pretty old school, traditional, so a crystal ball will do, right?
Exactly, the classic. You're just talking about it. Yeah, it's a massive move up, but I mean, still note that we are in a downtrend on the market. We have not broken trend just yet. And we see these up and down moves all the time. So just be cautious. And that kind of leads me into Michael's main question. And I love the typo, but I'll read it the way you were supposed to write it. He says, Riz, are you still bearish long term? Or do you feel this could be a turning point in the market? This bounce off of 4,100. Do you think this is the turning point, or are you still more of a bearish sentiment at this point?
Wow, wowzers, that's a long one. But yes, do bearish long term to feel this could be a turning point. Yeah, so yeah, I am now leaning a little bit bearish. So last week you noticed I was like, okay, this is a bit too much. Market's oversold, right? It was.
Yep.
And I'm like, look, I can be bearish for the long term, but doesn't mean it's going to be a straight line down, right? So as traders, we want to take these opportunities for going long and short, or holding capital, having hedges via cash or other means. And that was that time where when I released the dip buy list, I'm like I literally pointed out, guys, this is the stocks that you can consider buying at these levels, and these are the ones that maybe you want to wait for to reach a certain price. And that's me saying, okay, there's opportunities in the market. So I was a little bit more of a bullish slant up until the end of this week. Now in the short term, I have to be a little bit bearish, and that's just the way I am. I have to be a bit contrarian. I don't like to simply just follow like a pure momentum trader who, maybe has to rub a few brain cells together. Might be like, okay, we gotta buy this. Like we gotta buy this. Nah, fam.
Yeah,
Like that's
jump
not
on
me.
this right now. Buy, buy,
Yeah.
buy.
All in, buy, because it's like 5 green days. Like we're gonna get the sixth and seventh and eighth. Like they clearly don't understand probabilities and statistics, right? And I'm no mathematician. I'm no academic in that sense, but come on, like like I just grind my gears. I get it. Yeah, momentum trading works is fine, but at this extent, fuck no. I take the opposite side any day, and I have. So this brings me to my point of uh again, maybe maybe you don't. Obviously, if you're in the league, you should know. You better fucking know, because like I did a fucking poll on it. So I literally had again, full disclosure for those of you that are not in the lead. So I did take a short position on S&P 500 futures. So again, the market S&P 500, but via the futures contract. So Chris, you can keep this up because it's the same thing anyways. There's no point bringing up the futures contract specifically, but ultimately I took a short on Friday, and then I scaled in and I scaled in, and the trade went against me a little bit, so I'm still in. And then I did a poll near the end of the trading day where I'm like, should I up my position size in an average and more? Which to that poll, the answer was a resounding yes. Yeah, we had some people in the other camp too who were worried about me, but the others definitely not worried about me at all. Um,
It's easy to do that when it's not your money.
I know,
It's like,
right? I find
should
it.
I
I mean,
average
it's
up?
great.
Absolutely do it.
Yeah, they're like just cheering me on. They just want to see me get like eviscerated almost. I feel like it's almost like putting me in a gladiatorial arena against this giant, I don't know how much tigers or lions weigh, but fuck, like,
More
little
than
Riz,
you and me.
and they don't even give me a sword, right? They're just like, fuck, go get obliterated. But
Hands
anyways,
on.
um, so now I have this $1 million notional short position on
Oof.
S&P 500 futures. Um, so that will be interesting. You guys and Elite will definitely be the ones to know in real time how that plays out. Do I get my ass handed to me? Do I get absolutely demolished? All for fun and games, right, Chris?
Oh,
Nothing like losing
absolutely.
money. Nothing like
Hey,
yeah.
go ahead. I was gonna say this segues perfectly into Yas's question. He says, "Do you see the SPX retesting recent lows?" I mean, obviously we do because Riz has this short position. It's obviously going to retest and it'll go lower to make it even better.
No, I don't
But
know, Chris. You're too kind.
without that there,
Yeah.
do you think that the S&P can do a 180 here and kind of get back towards that 4100 area?
You're too kind. I don't think I honestly feel like, I mean, it's funny as I was doing this, people are like, oh yeah, Riz is he's maybe losing a little bit of money now, but he's gonna end up making money. I was reading this, I was reading along because I always follow the chat. I may not respond or always give my 2 cents, but unless called upon, unless summoned, so to speak. But other than that, I am always watching, and I always tell my friends, I will get to Jazz's question shortly, but I always tell my friends, look, I don't hear too well because I mean, if you've been following along, I have some inner ear damage. Again, long story short, I don't hear too well, but don't be fooled, don't be mistaken because I see everything. Okay. So that's something to be mindful of if you're an elite. I do watch. I am there, always there. But to answer your question, Jazz, yes, I do obviously feel like we can pull back a little bit. Now, does it mean Chris said, we'll go pull back and then we'll go lower? I mean, I think Chris is giving me a bit too much credit, but I do think even if we see a little bit of a pullback, like let's say we see 4,300, that's good enough for me personally. Again, I have skin in the game. Again, I'm biased in this way. I would have to be. Obviously, I got a notional position there. So again, full disclosure, I am biased. I do have that exposure there, and obviously, I would like it to go lower. But doesn't mean it has to go to 4,200, 4,100 low. The past this October low, right? I would like it to. But let's see, right? Let's see. Even if it pulls back, I could tell you guys with my short position, even if it pulls back to 43, let me pull up my numbers on my end right now. I can pull it up. I could see my average cost on the MES contract, futures contract. Futures contract, there's a little bit of a spread, but ultimately, yeah, if it drops even the 365s, what are we at? Yeah, even if it drops like another 15 points, if the market drops 15 points, so let's say it goes to 43.40, I'm making a decent amount of money. Not bad considering, I was losing a few grand, turn that into making a few grand. Not bad. Uh, and I know people will be like, Riz, but if you have a notional value of a mil, why is it only making a few grand? That's stupid. And to that, I would say, yeah, the risk reward may not seem like it, but the thing is, I'm not putting up a mil all at once into this trade. That because I'm shorting. When I'm shorting, obviously there's leverage involved, there's margin involved, and when I'm have a notional value of $1 million short, doesn't mean it's taking up $1 million of my account value. I'm pretty much putting approximately, let's just say maybe 1/10 of that up. So out of 100K, let's say that I'm putting up, and if I can make 5K, 10K, 4K as a percentage in the past few days, that's not bad for a swing trade.
Yeah, for sure. I would totally take
So
that.
that's an important distinction because people always tell me as when I share this stuff transparently online in social media, Instagram, they're like, Riz, you put a half a mil position on so you can make a grand. Like, no, man, I put up, 40K to make a couple grand in a day, in a few hours. That's fine. You know, I just trade that size. So, uh, but yeah, a little bit of a clarification. But I do have $1 million worth of exposure. So imagine, every tick. So if I have 47 contracts, every tick is $5. So every point, right? To give you guys some context, 47 times 5, that's 235 bucks every point. So if just think about it this way, guys. Okay, think about it this way. 4,358, right? That's the level in the S&P 500. If it goes to 4,357, I'm losing another 230 bucks, let's say. Okay, it drops, or sorry, goes up to 4,359 because I'm short. If it goes to 4,400, so what is that? 50, what is that?
Oh,
42 points?
we got to break out the calculator here. This is math on stream. This is hard, right?
Yeah.
So we got 4,400 and 4,358. Yep, 42 times what was it?
47. Oh, hold
40,
on. So what is it? 235?
yeah.
Yeah, 235 each point. One sec. 47. Yeah, 235. So each point. That's 98.70. If the
That's
market
harsh.
goes to, yeah, if the market goes to 4,400, just assume, unless I've closed before, that I'm losing just at least 10K on that trade. All right. On the flip side, let's do again. Sorry, I know you just
No,
closed
no,
on
it's
the
cool.
calculator. If it goes, let's say it goes to 4,300. Okay. So what is that as a point? Like my cost is a little bit lower. So don't even do 58. I think I'm like 10 points lower. So like 40, if my cost is 43, 48, let's say, um, that's, let's just say 40 points. Just drops 40 points. 40 times 235. What do I do? I make 9 grand, 10 grand.
Yep.
There you go.
9,400
So I'll take that if I get it, right? If it
for
gets there,
sure. For
right?
sure.
But
I would take it too. Now, Michael brings up a good question. If we do have this, if the face ripping rally continues, what is your hypothetical stop loss on your short? Are you just going to, when are you going to throw in the towel?
great question, Michael. Probably 4,400. It's funny you asked that. I just gave that 4,400 because that's an actual realistic level that probably just throw in the towel, eat the loss, um, take a nap.
It's usually how Riz does it. Now, okay, I know it's going to be in the comments, right? They're like, but Riz, your risk reward is 1 to 1, not 2 to 1. How can you possibly make money in the market doing
Yes, great question. YOLO. No, but seriously,
that?
no, I'm giving this as an example, right? Remember, I'm pure discretionary. I have an 80% win rate, not including all my other YOLOs or like shorting Chinese garbage. If you include those stocks, it's probably around a 90% win rate. Uh, remember, average pro traders, if they have about a 55%, if there's a trader that comes to me and he's like, shows me his track record, he does a 60% win rate and a good risk management, I'd hire him.
Yep.
Okay. So I operate on again, I'm not a day trader, but I operate on an 80% win rate, and I've been doing it for the last 3 years. Remember, not 80% win rate over a week, over a month. I'm
Yep.
talking over a span of a year. Okay, we're nearly the end of the year. We got 2 months left, and I have an 80% win rate still. Um, that tells me I'm doing a little bit right, maybe, right? I think, right,
I
Chris?
would think so. I think most people would take an 80% win rate. I know I would.
Yeah. But here's the caveat though. The reason I have a high win rate like this because I'm so selective
Mhm.
with my entries, one. And then two, I don't set hard stops. And I know that's not the parroted uh, response or risk management uh, advice.
Paradigm. Yeah.
Yeah, paradigm. I obviously say, you use stops, especially obviously if you're day trading, you have to
Oh, yeah.
have
Oh, yeah.
those hard stops. But for swing trading, and swing trading, not micro caps, small caps, mid caps. I mean, swing trading large caps like I do, and with my system, I feel like having hard stops are a detriment because they can just screw me out of the trade, and usually they end up being right. I just need to give it more time. I just need to have more patience. So I do have quote unquote stops, like areas where I'm like, fuck it, this is done. This has gone against me. There's no point fighting this. I was wrong. Out for a loss. But I don't have a predefined stop loss order sitting there, which will get me out because I'm watching this shit anyways. That kind of stuff makes sense for sure. If you're new, you want to be very mechanical, you want to be discretionary, but also have everything defined, which is fine. It's great. But for me, that would actually be like cutting my first digit of my fingers off. Why would I do that? Again, that's for me, right? It's 16 years, millions made, thousands lost. That's why. Okay, I think that's why. So I say this with the utmost humility that I don't set hard stops for that very reason, and that allows me to stay in trades maybe a bit too long sometimes, than some others might prefer. But that's what works when you are swing trading large caps. Fuck all this trying to get in and out, and then you know try and make it look like it's some rocket science, because it's not rocket science. Trying to make it look exciting or sexy or like, oh yeah, look how much I made in 5 hours. No, it's not always like that. The market move in days, months, and years. Fuck all that 2 minute bullshit.
5 hours. What are you talking about? You're no day trader. 5 hours. I'm talking 5 minutes. Come on.
You know what I
Yes.
mean?
You know better than that. Oh gosh. No, great questions tonight, guys. Thank you everybody for coming out. Riz, do you have any other closing comments or did you pretty much cover it all?
I think we covered it all. This was fantastic. Honestly, I love the turnout, love the questions, love the responses. I think
Definitely.
it makes it definitely worthwhile. I enjoy coming on. I appreciate everyone getting on here with their questions, supporting. It means a lot. You could be doing anything with your Saturday night, anything literally, and you come on here and you support us. You listen, you pay attention, you participate. I would give you guys a medal if I could. It means a lot. I know I speak for Chris as well. So please continue that. Again, for those of you watching the recordings, the web after the fact, yeah, maybe you're an elite, maybe you're not, whatever the case is. Again, appreciate you too watching, putting your time in, and following along.
Definitely. And if you are watching the replay and you haven't hit the like and subscribe button, do so now on your way out the door. We'd really appreciate it. And as always, we'll see you in the market on Monday.